All right, so welcome to today's class, and today we're going to be talking about basic market structure. All right, this is going to be a comprehensive course on market structure. We're going to be looking at market structure from the basic level to the advanced level. All right, and then we're also going to look at some market structure mappings. But in today's class, we are basically going to be talking about market structure. So with no further ado, let's dive in straight up into the class. All right, so now I want you to understand something. We have basically, all right, three market direction or three types of trend. We have the uptrend, we have the consolidation, and then we have the downtrend. All right. Now the uptrend, just like the name implies, is when we have price moving bullish. Okay, and then the downtrend, of course, is when we have price moving the opposite, which is bearish. Now, when it comes to consolidation, right? When it comes to consolidation, basically we have price moving sideways. Price is neither going up or going down. Price just happens to be at a particular level moving sideways. All right. Now, I want you to understand some things about the uptrend market. All right. Now, this is a basic illustration of the uptrend market. This is a basic illustration of the uptrend market, in as much as price does not move this smoothly. Okay, but this is like a basic illustration of the uptrend market. Now I want you to understand, and I want you to also know that in an uptrend is made up of two things. An uptrend is made up of higher highs. All right, I'm gonna write them here. It's made up of higher highs, and it's also made up of what? Higher lows. Okay, it's also made up of higher lows. So an uptrend is made up of higher highs and higher lows. Okay, now I'm gonna just map them out. Now these are the higher lows, while these are the higher highs. All right, the higher highs can be denoted for HH, while the higher lows can be denoted for HL. Now, what is a higher high? Okay, what is a higher high? A higher high is simply the highest point. All right, this is simply the highest point. All right, this is simply the highest point. Oh, sorry for that. This is simply the highest point. All right, after a break of structure, okay, before the beginning of a retracement move. After a BOS, let me put that in capital. After a BOS, before a retracement move, before a retracement. All right, now that is what a higher high is. I'm going to explain, and I'm also going to show you live chart examples. Now, what is a higher low? A higher low is simply the opposite of a higher high. All right, a higher low is simply, okay, it's simply the lowest point, simply the lowest point, okay, before the move that broke above previous high, all right. So now that is what a higher low is all about. All right, now let me explain using the definition. Right now we have price, or currently with the illustration on the screen, we can see we have price, all right, moving this way. Now I said a higher high is what? It is simply the highest point after a BOS. All right, now what is a BOS? A BOS is a break of market structure. What do I mean by a break of market structure? If price is moving in an uptrend this way, all right, and price is trading this way, and then price happens to break above previous high, all right, this break that actually occurred here is called the break of structure. In the case of a downtrend, if we have price doing this, all right, and then we have price break below previous low, then we have this, all right, this point here to be a break of structure. Let's get back to what we were talking about. Now I said a higher high is simply the highest point after a break of structure. all right, after a break of structure before a retracement move. Now you have to look for the highest point. Now if you check, okay, this is what the highest point before this retracement after price had broken structure. Now in more realistic cases, okay, you can have something of this nature. You can have something like this. Let me give you a more realistic all right, now in such a scenario, now how do you know your higher high? Let's say we have this. How do you know your higher high in such a scenario? Now if you said this is your higher high, I'm sorry but you were wrong. If this is your higher high, I'm sorry but you were wrong. But now if this is your higher high, then you are correct. This is your swing high. A swing high is also synonymous to a higher high. All right, this is your higher high. Now why is this your higher high? Don't forget it is the highest point. Now this high is higher than this, is higher than this, so this is the higher high. But if possibly peradventure maybe we had this one to be like this, lower than this one now being the higher high, the highest point, this will now be our swing high or our higher high. But for the fact that this is higher than both of them, this happens to be the higher high, all right, before the retracement move after the break of this structure. Okay, I believe I made myself clear right there. Okay, I believe I made myself clear right there. Now, this might want to seem like a lot, so you need to watch this video over and over and over again for you to have a clear understanding of what we're talking about, all right? So now, what is a higher low? A higher low is the lowest point before the move that broke the previous high, okay? Now, this higher low is very simple. A higher low is simply the lowest point, all right? Now, this is the lowest point before the move that broke the structure, okay? Now, in a more realistic example, we're going to have something like this, all right? Okay, now we have the break of structure to be right here. Now, if we have the break of structure to be right here, where is going to be our higher low? Our higher low, of course, will have to be this point because this is the lowest point. Now, this is not our higher low simply because this low is lower than this one. This is not our higher low simply because this low is lower than this. But if maybe something happened and then we had this like this, then this will now be our higher low simply because this is now the lowest point before the break of structure. I believe I made myself clear. Now let's proceed with the downtrend. Okay, let's proceed with the downtrend before I get to explain what the consolidation is all about. Now, when we get to a downtrend is simply the opposite of what the uptrend. Now, in a downtrend is made up of lower lows and lower highs. Now, what is a lower high? A lower high is the highest point before the move that broke structure. A lower high is the highest point before the move that broke structure. So if possibly we had a downtrend like this, and then we had this, we had this, we had this. All right. Now, where will now be our lower high? This, of course, will be our lower high because it is the highest point before the move that broke below structure right here. But if this one now was like this, then this point now will end up being our lower high simply because it is the highest point before the move that broke structure. All right, so I believe that is clear enough. Now, what is a lower low? A lower low is simply the lowest point, all right, after the break of structure before the beginning of a retracement move. It's simply the inverse of what I said previously on the uptrend structure. Now, also, if we had this, okay, let's assume we had this, all right. Now, where's going to be our lower low? This is going to be our lower low simply because this is the lowest point after the break of structure, all right, or after the break of structure, okay, before the retracement move, all right. So that is also clear. At the end of the video, I'm going to give you some live chart illustrations so you know what we're actually talking about. Now, a consolidation move basically in this kind of price movement, all right, in this kind of price movement, price is neither going up or down. Price happens to just be moving sideways, all right. Price is neither going up or down. Price is just moving sideways. Okay, now I want you to understand something. You should have this at the back of your mind, all right, that when price is actually moving sideways, you do not want to be taking a trade. This is simply because you don't know where price is actually headed. You don't know if price is actually going up or going down. All right, so have that at the back of your mind. If price is consolidating, it is best for you to stay out of the market, simply because after a consolidation, price can simply decide to break out at any point. So a consolidation, price does not have a higher high or higher low. A consolidation market state, whatever, simply just have highs and lows, highs and lows, highs and lows, highs and lows, highs. There is a way you trade it, but it's complicated somehow, and you will need some level of professionalism or expertise to be able to trade a consolidating market. All right, so have that at the back of your head. Okay, so that is all about consolidation. There are no higher highs and higher lows in consolidation. They are simply just highs and lows. And then at the end of the day, you either see price break above and then retrace and then start going and then become an uptrend. All right, or you will see price, all right, will break below and then begin an uptrend. So that is just it about consolidation. Now I want you to understand something about this uptrend and downtrend structures. Okay, I want you to understand something. Now in an uptrend, okay, in an uptrend, I want you to understand that the highs are unprotected in an uptrend. Okay, the highs are unprotected in an uptrend. What do I mean by unprotected? This basically means that in an uptrend, expect the highs to be taken out. All right, expect the highs to be broken in an uptrend. Expect that the highs will be broken in an uptrend. Okay, because if the market is trending upwards, this high will definitely be broken. If it's trending upwards, this high will definitely be broken. So the highs are weak and the highs are always the targets. All right, I believe that made sense. Now if it's in the downtrend, okay, expect the lows to be taken out. So in the downtrend, the lows are weak, the lower lows are weak, because price will take out the low. Downtrend, price will take out the low. Same thing that has been happening all through. Price has been taking out the lows. So in a downtrend, the lows are weak. Now in a downtrend, in an uptrend, in an uptrend, the higher lows are protected. This simply means you do not see the lows being taken out. Now, price did not take out this low. When I say take out, I mean for price to trade below the low. Okay, that's what I mean by takeout, for price to trade below the low. But you can see that now in an uptrend, price does not go below the higher low. It's going to invalidate something. If price goes below the lower low, it rings a bell for something. All right, and we're going to get to look at it in our next video. So have it at the back of your mind that in an uptrend, the lows are protected. All right, so you can simply see that price will not break below this low in an uptrend. And if price eventually breaks below the low in an uptrend, you are safe to know that, okay, this trend has been violated. This trend is no longer an uptrend. You can actually say that. Now, in a downtrend, the case is different, okay? In a downtrend, the case is different. In a downtrend, the highs are protected while the lows are weak. All right, so like I explained earlier, in the downtrend, the lows will always be taken out. But then if possibly maybe something happens and then you now see that in a downtrend, the previous high was now taken out, you are safe to say that the trend has been violated and something is about to happen in the market. All right, now with that being said and with that being explained, I believe you've understood this about basic market structure. So let's go over to the charts and let's try to identify price. Okay, so now this is the 1 minute time frame on GBP USD. Now let me just use the 1 hour time frame because I do not want you marking structures or higher highs and lows on the 1 minute time frame. So I'm going to be using the 1 hour time frame for this illustration, and then we're going to wrap up the class there at this example. All right, now I want you to take a look at something. First of all, let me just clear this out. Okay, now I want you to understand something. Yeah, now this is okay. Let me start from here. All right, I'm gonna start from here. Now this is what a low. All right, this is a high. This is a higher low, all right? This is a higher high. This is a higher low. This is a higher high, all right? This is a higher low. This is a higher high. This is a higher low. This is a higher high, all right? And then let's stop there, okay? Now, there's something I want you to take note when it comes to marking out higher highs and higher lows. They are obvious. If you have to come and be checking and saying, is this a low? Is this not a low? Is this a high? Is it no? Then it is not. Then it is not valid enough. Higher lows and higher highs are clear. They are obvious. Once you come to the chart, you can obviously see that this is a lower high, this is a lower low, this is a lower high, this is a lower low, this is a lower high, all right, this is a lower low. Now let's check between this high and this high, which one is taller, which one is the highest point? I believe this is the highest point, so this will be our lower high because this is the highest point. Now this is a lower low, all right, this is a lower high, this is a lower low, this is a lower high, and then this is a lower low. So you can see these are obvious reversal points. These are obvious reversal points. They are so obvious. All right, sorry. They are so obvious. They are so obvious. They are so obvious. They are so obvious. These are obvious reversal points. Obvious reversal points. They are so obvious. All right. I am not coming to come and say, is this one here? Is this not? Is this one here? No. When it comes to marking out higher highs and higher lows, take note of the obvious reversal points. All right. So I believe I've been able to do justice to this topic, and do well to go on your chart and practice. You can only get better by practicing when it comes to trading. So until I see you in my next video, do well to give this video a like, drop a comment, and hit the subscribe button. Subscribe to this channel because I'm also going to be dropping other videos on market structure. And my name is King Wesley, and you can always text me on WhatsApp if you would love to save my contact and also gain from my content. All right, so have an amazing time trading, have an amazing time learning. Until I see you in my next video, is King Dana signing out.